As we're talking right now, it's been a few days, actually a week or two, since your reposting of a tweet criticizing Sherwin Williams. And essentially, did Sherwin Williams eliminate the 401k because of their economic situation, or did they just eliminate the match? And why did you choose to retweet?
Yeah, so it's an interesting one. So they chose to eliminate the match, and their argument was very straightforward. It is a cost-cutting measure. Many people don't fully appreciate how the 401k system works. Post 2006, the vast majority of people who have some form of employment now have a automatic participation into the U.S. retirement system through their 401k. And one of the mechanisms that was actually created to encourage companies to participate and to offer these programs was the employee match and the special treatment associated with that. It is one of the true benefits that raises the value of the retirement system in the United States. If you think about it in the simplest terms, I could choose to take no risk whatsoever, contribute on a tax-deferred basis 6% of my salary. That 6% could go directly into treasury bonds and then get matched by my employer, an entity like Sherwin Williams, giving me not only the return of the tax deferral and my investment into a treasury on a safe basis, but they're then matching that and effectively doubling that. So I'm getting 100% return on my investment before I even get started. That's an extraordinary incentive for people to save for retirement. It's one of the true mechanisms that offers people something close to a guaranteed return and facilitates the dollar cost averaging and regular participation in retirement plans that we're all hoping to see out of programs like 401ks. When Sherwin Williams does something like cuts that guarantee, it dramatically reduces the embedded guaranteed return associated with those contributions and has an impact on that retirement system that is quite meaningful. It also is candidly kind of absurd to think that if an entity like Sherwin Williams, which last year made $2.5 billion in profits, and today year to date has repurchased over $1 billion of shares of its own corporation, largely enriching shareholders and executive management who are compensated in stock terms, to rebalance their profitability by eliminating a program that at its upper limit could cost $200 million and is a primary benefit to their employees, to me felt completely inappropriate in an environment in which households are increasingly stressed in their ability to save for retirement.
Two things, and I want to repeat what you just said, but first, I interviewed Ted Benna years ago when I was at Yahoo Finance, and he is the father of the 401k. He was the one who noticed that you could have a tax advantage for management through line 401k of the IRS tax code. When you criticize Sherwin Williams for this action, are you saying that it would have only cost them $200 million to continue to support? It's essentially a savings program. And that's what Ben has said when I interviewed him. The best thing about the 401k program, he said, is that it's savings for people. He has a lot of criticism about how it's become the main retirement vehicle for people. But he does say it's a savings program. So what I hear you saying is management rewarded itself at the expense of its employees, thousands of people, and all they had to do was spend $200 million when, was it their profit was $2 billion last year, you said?
Yeah, their profit was $2 billion last year. Actually, I think it was closer to $2.5 billion. And they've already spent $1 billion $100 billion in the last year repurchasing shares, which helps to drive up the share price, which in turn primarily benefits those who are tied to the share price and their compensation, i.e. senior management. So this is a very cynical move by a corporation that I think unfortunately speaks to the stresses that most Americans are experiencing. Now, when I retweeted this, part of the reason I retweeted it is this is certainly not unique to Sherwin Williams, right? Intel has announced similar programs that they're cutting back. IBM has announced similar programs and is cutting back on 401k programs. Sherwin Williams is one of those companies, though, that ultimately, if you think about it, is kind of the bread and butter of the American heartland. It's based in the center of the United States in that traditional flyover country that we sometimes ignore in the financial press. And candidly, it's a product that is purchased largely by consumers. And so announcing that I'm no longer planning to purchase Intel products is a very, very hard thing to actually stick to. For, among other reasons, I only repurchase computers every once in a while. There are a limited number of manufacturers of computer processing units that would sit at the center of my computer. That speaks to an entirely different issue around growing monopolization. Paint is something that is really easily identifiable. And if you want to actually take action against these types of events, the simple answer is you don't buy their paint. You tell them very clearly, we don't like the way that you've treated your employees at the expense of executives. In the same way people reacted to Bud Light and chose not to purchase their products, this is an opportunity to express your dissatisfaction in products that people see every single day.
Are you calling on people to boycott Sherwin-Williams? Simply, I used to live in Cleveland. I had friends who worked at Sherwin-Williams, both in the stores, but also at headquarters down in the flats. I think they moved it recently. Are you saying people should not buy Sherwin-Williams paint till they fix this?
My argument is that I personally will not. Ultimately, people can make their own choices. And so all I can do is lead by example. I'm not calling for people to boycott Sherwin-Williams. I'm simply making people aware of the opportunity to express their voice in that manner.
And last thing on Sherwin-Williams, but it opens the door for a bigger discussion about something you wrote on Substack. And basically, the American worker, the American middle class is what I'm talking about. But also about something that's going to happen in New York is, how could you not vote for the socialist when you have this kind of situation playing out in corporate America? I'm not voting for the socialist, by the way. I will be public about that. But if you could sit down to the CEO at Sherwin-Williams, I forget her name, what would you say to her?
Well, the simple answer would be exactly what I've said to you. This is an abuse of your power with your employees, the savings relative to what could be generated in other areas of your business, and candidly, the admission to your shareholders that you've managed your business to the point that you're vulnerable to these types of events is what should be taking primary, it should be the primary messaging here. If the CEO wants to announce that she herself is revoking her benefits, that she's dramatically reducing her compensation, and recognize what a sizable reduction that would have to be to have any sort of impact on herself that is anywhere close to the impact that this is having on her employees, I'd be more than happy to entertain that conversation. But my frustration is there is no push for that type of leadership by example. One of the challenges that we have in our society today is that we're not speaking openly and honestly about the trade-offs and choices that we're making, which is really the point of the Substack that I wrote around the H-1B visa, where I know we're going next.
So let's talk about that Substack. And I'm going to, I'm opening it up here. So if you see my eyes going back and forth.
That's fine.
People can find this first. Your Substack is Yes, I Give a Fig, Thoughts on Markets from Michael Green. And you made this Substack free. And you titled it, Yes, I Voted for This, Small Part. Why a $100,000 H-1B fee is spectrum logic, not xenophobia. So President Trump last week announcing, look, we're going to do a $100,000 H-1B visa. I have friends who are from different countries who are here under the H-1B visa program. They immediately started to panic. Let's go through what you lay out as, and I've read this, you know that I was like, oh, I didn't consider it that way. What we're missing in the discussion, because that's key to what you just said about Sherwin-Williams. Let's have an honest discussion about what's going on.
Yeah, and I think this is really the key component to it, right? An H-1B visa is a work permit that is offered to the corporate sector to facilitate their obtaining talent that is otherwise unavailable domestically. That is the point of the program. It is sidestepping the traditional process of an individual deciding to apply for a visa and green card to come work in the United States. Traditionally, employment is one of those mechanisms. The offer of employment or the ability to become gainfully employed raises your probability of obtaining that green card, raises your probability of ultimately becoming a citizen. The H-1B reverses that and basically becomes a corporate sponsorship program where the corporation says, hey, we really want this person. Changes were made to that program, made under the first Trump administration, that changed the process from one in which you needed to complete an application and then be subjected to a lottery to instead we lowered the fee. We basically said, hey, you just need to pay a small fee to enter the lottery. And if you are selected, then you can choose to create the application. While that sounds like a really good idea, hey, we're just going to have a lottery and those that get selected so that we don't have the ancillary legal costs associated with applications that then don't make it through the lottery process. Unfortunately, what that did is it changed the game theory of how you play it. Suddenly, instead of people saying, okay, I need to make sure that I identify employees who are really worth this investment because I might lose this money if they don't get the visa, they don't win the lottery. We flipped the logic and we said we're going to have thousands of entries, literally 5 to 6 times as many entries as we historically have had, because people are basically trying to win spots in the lottery and then deciding how to find the employees that fit those needs. That biased the system in favor of Indian consultancy firms like Tata and Infosys and Wipro, who now dominate that process. And instead of it being used to bring in high-skilled immigrants, it's largely being used to bring in entry-level technology workers, gaming the system in a manner that is quite unproductive.
Bree, I want you to reiterate that, because there was a Wall Street Journal article, I think, that talked about the real goal, the real target of this was the $280 billion Indian company. And it's not a xenophobic action. It is an action to protect American workers from an unfair gaming of the H-1B visa system. Is that accurate? Can you state what you said again?
Yeah, so I think that is the intent. Right. But like most of the executive orders that get produced without being fully vetted, there's loopholes that have been created here that could subvert that intent. So, for example, the executive branch has the capacity to waive the fee at their discretion. That obviously opens up the potential for corruption and abuse of the system in which favors are purchased at significantly lower than $100,000 cost, and then the fees are just waived. Right. That creates an opening for grift, which many on the left have immediately seized and said, this is a bad strategy because it does this. I agree with that. That is a concern that I have. On the right, this policy is being attacked because it is anti-corporatist. So the right perspective on the extreme is this is absolutely necessary because companies rely on this low-cost labor. They'll never insert the phrase low cost, but that's really what they're ultimately saying. Right. So this is a policy that is being attacked on both sides, even as it is surprisingly logical in its construction. What this is really doing at its core is it's saying there is a price of admission into the skilled labor force in the United States. For American families, that's the cost of a college education. These programs are only available for those with a college degree. In the United States, a family will spend between $120,000 and $500,000 on college degrees in order to become a competitive member of our labor force. This is simply saying we're going to charge corporations something akin to that entry fee that is currently being borne by the U.S. worker in exchange for giving them access to it. Is $100,000 the right answer? I honestly have no idea. And this is one of my frustrations, again, with how badly formed the policy is as it's constructed. We should be using clearing mechanisms like reverse Dutch auctions to try to establish market pricing. And that in turn then allows price discovery. Just how valuable is participation in the U.S. labor force?
Let's break this down, because you're critical of the $100,000 fee for the H-1B, not because what I hear you saying is, look, the jobs in the United States can be filled by Americans who have invested between 120 to 500,000 to get the degrees. You corrected me when we had a discussion before we began recording, because I always thought the H-1B visa applicants had high skills and were going to high paying jobs. And what you pointed out in the Substack and then corrected me was, no, it's $65,000 is it entry level or mid level jobs that could be performed by Americans. Is that the first issue we're talking about here?
That really is the first issue. And again, that was a change that was introduced under the first Trump administration, implemented largely under the Biden administration with no real changes to it. And unfortunately, what it did was create increased competition for the lower end or center technology worker, precisely where young American university graduates would be hoping to gain experience in the process. And so we've actually created a system that deeply disadvantages those in the United States who were pursuing a university degree in things like STEM, right? At the same time that we were turning around and saying, hey, learn to code, right? We use that as coverage to change the system and introduce increased competition. And now, of course, we're seeing the societal consequences. People are increasingly saying, well, college education isn't worth it. Well, of course it's not worth it, because the corporations are sourcing their entry-level college employees from India. And as a result, that feeds xenophobia where there is actually none. We've created economic incentives that manifest itself in immigration patterns that feed xenophobia when it's totally unnecessary.
So what I'm taking, and I am a Luddite when it comes to these kinds of issues, but what I'm hearing is we do have the employee mass in the United States to fill these jobs. Therefore, there really isn't a need for the H-1B visa for those specific jobs. That's the first takeaway I'm hearing, correct?
Well, what I would suggest is that we do have the capacity to fulfill those, but in part, it's going to require investments in training by corporations, building human capital that they're effectively trying to skip by going through this process.
And so that's one issue. The other issue, though, is will we drive jobs overseas? I mean, in a world where everything can be done via video, I mean, I have conferences with people in Europe and Asia from my company who I don't see face to face. So why even have an H-1B visa program if I can just connect people via video?
Well, again, this is actually one of the great ironies, is that the system as it's set up is designed to identify areas in which there are genuine talent shortages and skill shortages. In today's world, it's not unusual for a corporation to pay hundreds of thousands of dollars to a headhunter to find a skilled employee domestically. This is simply, again, establishing balance and saying what we're actually doing is we're creating enough of a barrier so that this program is only used for those high-skilled employees that are genuinely not available in the United States. Perversely, by lowering the cost of participating in this program, we've made it very high cost to identify that high-value employee because there's a low probability of success that you're going to be selected in this lottery, and therefore, why bother? Right, so we don't actually bring over the highly skilled employees, or we find workarounds through other components of the immigration process. The H-1B visa has been largely captured with that low-skill consultancy framework that I was referring to before.
So the way to correct this, if you had President Trump's here and if you had Congress's here, one, corporations in the United States need to get back to training their entry-level employees to scale up their human capital. But what's the other fix? Because I think I misunderstood. Did you say a reverse auction for H-1B visas or?
So a reverse Dutch auction is simply an auction process in which everybody ends up paying the same price. So what you're actually trying to do is identify the clearing level at which all 85,000 H-1B visas are met. That is actually exactly what I would suggest. I would suggest that this is a scarce resource. We have identified that there's roughly 85,000 roles that we'd like to offer to highly skilled individuals to bring them over to the United States and fill corporate needs. This is a specific section of immigration that is set aside for the corporate sector and effectively allows them to skip the traditional immigration process. There's a price for that. And this is a scarce public good. And just like we auction off Spectrum, and just like we auction off taxi medallions and other things that are really public goods, access to New York City transportation or access to airwaves that belong in common to the US public, we should be auctioning off those results. It does two things. One, it improves the efficiency of outcomes. So if I really deeply value it, I can bid very, very high. And then that reverse Dutch auction, by creating a clearing price, means I'm just going to pay the same price that everybody else did. So my enthusiasm for the process doesn't disadvantage me. It simply raises, I'm signaling how willing I am. That's information, and that's valuable to policymakers. And that's part of what we ignore when we strip market mechanisms from things that should be market mechanisms. What's the value in 2025 of access for immigrants to the US, or for corporations to bring in highly skilled immigrants to the US labor force? I want that information. And when I obtain that information, who should be compensated for it? The American public, because what we should actually be doing is taking the funds that are raised. Currently, the system raises about $7.5 million a year. That's nowhere near enough to even offset the cost of operations. At 100,000, assuming that's the clearing price, which, by the way, again, I express no confidence in. I don't know whether it's 100,000, 200,000, or 50,000. I want to obtain that information in an auction. But at 100,000, you're talking about this program raising $8.5 billion that could be used not only to cover the program administration, but also to identify areas, because I now have that information, I can identify areas of shortage and offer scholarships in STEM, offer debt forgiveness for those who pursue degrees in these areas. I'm helping to raise the quality of the US labor force and address the very shortages that corporations are telling me exist.
Are you aware of who has the ear of the administration or Congress advocating what you've just laid out?
The quick answer is no, and this is part of the challenge. This is one of these unique situations in which I think that there's an opportunity for collaboration on both sides to get a better outcome. This program is simultaneously being attacked from the left on the basis of, well, it's economically irrational, and I would argue that that is largely a function of people on the left saying, this originated from Donald Trump, therefore it can't be good. The simple answer is this is better than what we have, and we should actually be figuring out ways to work together to make it even better, as I've described. On the right, this is being attacked because it's coming from a corporatist perspective. Those who ultimately are arguing, oh, we should just have a free market and companies need to be able to obtain labor, and this is allowing them to do that. It's disadvantaging U.S. families. It's advantaging the corporate sector. It's understandable that they attack it. That's why something like this policy is so interesting, because it creates an opportunity for the left and the right to actually come together, recognize there's opportunities for improvement, and work to make it slightly better and actually get this through the process, advantaging both the U.S. worker and candidly reducing the potential for grift and corruption that exists when you establish the flat level system.
When you said left and right come together, the sarcastic voice in my head said, yeah, right. I mean, what is the likelihood? Where's the leadership that could do that? Because you've laid out a very, it would appear to me, viable alternative to the current H-1B visa program and the proposed change to the H-1B that would benefit American workers. And no one's advocating for that.
This is the frustration that I experience, right? I just explained to you why the right is not advocating for it and why the left is not advocating for it. We know in this situation that this is actually a better outcome. All I've provided is the economic rationale that says this is a scarce resource. Of course it should be expensive. Right? This is actually a potential information vehicle that gives us more information about our economy and allows us to make it better. That's what prices do. Prices allow us to identify issues in supply and demand that either cause them to move anonymously, right? We call a spike in prices because supply is in shortage or because demand surges. We want to resolve that. That's what the price mechanism is doing. It's allocating scarce resources and identifying opportunities for investment. That we don't think about incorporating that into our policy making and instead devolve into tribalism on either side, representing just our point of view, is what prevents leadership from emerging. And this is one of these rare situations in which people take a few seconds, read my piece, get informed. Maybe we actually can start working together to get some better outcomes.
I just want to remind people that the name of your Substack is Yes, I Give a Fig, Thoughts on Markets from Michael Green. Help us understand what we may be getting correct or incorrect about this. I work in AI. I have accepted the narrative over the last year that AI is the cause of several college-educated, entry-level recent graduates not being able to find work. But now I'm wondering if that's accurate based on what you've just shared with me about the gaming of the H-1B visa program to get cheaper employees.
Yeah, I think it's been a much more significant factor than people highlight. And again, I addressed that in my piece. I identified that in these areas, we've seen relative wages fall. We've seen unemployment rise. The thought process that the U.S. economy has been stronger than people think, or at least has appeared stronger on a year-to-date basis than people might have thought, given the imposition of tariffs, in part is actually a recognition that as we get the revisions, we discovered that the economy was weaker than we thought previously. And, I would just emphasize that what we have seen is a decline in in full-time employment across the economy that is in many ways directly linked to the realization of some of the changes that we talked about in the H-1B program. People are upset about it for very legitimate reasons. This creates a significant supply of people competing with U.S. citizens and U.S. students who are precisely those we want to give the leg up in our society at this point. And we're demoralizing them in a variety of ways, as I address in it. The most obvious one being, and I'll just get on my soapboxes for this for 2 seconds. When you think about the process for applying for jobs online, one of the requirements of the H-1B visa is that you actually post that there's job opportunities available, encouraging people to apply for them ostensibly. If you post phantom job openings, and I open up as a new college graduate Indeed or another platform and see a job opening, I presume it's legitimate, I apply for it. What I'm actually doing is performatively applying for something that was performatively put up in order to qualify for H-1B status. I'm never actually considered for the job. That causes me to feel rejection and dejection and to feel that I'm not worth it in American society, and breeds the sort of nihilism that we're increasingly seeing from a younger generation who candidly we're dangling fake opportunities in front of. You want to create nihilism, create fake opportunities for people, and then express surprise that they're frustrated.
To wrap up on the H-1B visa situation, you actually cited the data from 2021. There were 269,000 registrants, and 2024, 759,000 registrants. Any idea what that number is going to be for 2025, even though we've just had this announced change?
Well, we actually have started to see processes of reform, and so it's begun to fall in 2025. And again, I didn't highlight this in the piece, but if we look at the data, I actually wrote about it a couple of weeks before, we have started to see a rise in labor force participation for those born in the United States, particularly those younger. There is some indication that reducing those H-1B visas, even as we've done so far in 2025 by reforming elements of the system, has contributed to modest improvement for those groups. Reforming it further, I believe, will actually start a process of raising the value of college education again. And again, we are seeing this, right? We're seeing more and more people say it's simply not worth it getting a college education. There's a wide variety of reasons for that, but getting a STEM degree shouldn't be something that is ultimately, a science, technology, engineering, and math degree should not be something that is frowned upon in our society under almost any situation. This is an opportunity to balance the playing field to a certain extent, raise demand for those who are educated domestically in this, and more importantly, get corporations involved in the education process again to say, you know what, we want to sponsor a program at a university that trains people to do what we need them to do.
We're going to shift into a discussion about passive investing. That's how I first met you many months ago. And then we're going to shift in to close all of this out to what should not be such a surprise that Mr. Mamdani will probably win. He's the Democratic Socialist candidate in New York City. But before we go there, I want to take a step back and just ask you, at this moment, as you and I are speaking in September 2025, regarding the U.S. economy, are you optimistic or are you concerned? I know how you feel about passive investing and what it does to markets, but generally, regarding the economic outlook, what's your feeling right now?
So, this is a challenge because it is a time-based question. On a longer-term basis, I'm extraordinarily optimistic. I think part of the excitement is created by distortions like the H-1B process, right, where there are such obvious mistakes that are being made and relatively minor changes that can improve outcomes for everyone at relatively low cost. Not everyone wins when policy changes, right? But the opportunity to introduce balance and thoughtful policies that are minimally distortive while generating the outcomes that we as a society desire, right? A wealthier, more skilled, more invested in, happier society is something that is created through these types of policy changes. Everybody wins, with the exception of a few corporations that are still exploiting the existing system. When we have those choices available to us, we should absolutely take advantage of it. The problem is that we have largely adopted a corporatist perspective. Part of it is because of passive investing, because we are all invested in the corporate sector We all cheer the S&P 500 going higher, even as we watch our individual outcomes deteriorate. And this is where capitalism and democracy are so well balanced. Capitalism ultimately says you get more votes the richer you are. Democracy says one man, one vote. And so ultimately, if you allow democracy or a system of representative government to become captured by the corporatist entities that benefit most and have the most votes in a capitalist system, you're unbalancing the system and ultimately setting up its internal contradictions and failures, which is what I would describe as Mamdani being elected in the center of American capitalism.
Not just Mamdani, and we're going to hit that in the next part, but what's created that in part is passive investing.
Yes.
And we've talked about this before. I pulled, as I love to do when I interview people, is I pulled some quotes from recent interviews and writings of yours. And here's one regarding the dangers of passive investing. The issue with passive investing is, first of all, it doesn't actually exist. As more and more people invest passively into the same indices, you're actually creating the conditions of outperformance for those securities. You are changing the characteristic of the system in which you were investing. You are no longer investing in a diversified index. So break that down for me, because there was at the beginning benefit to passive investing, but that's long gone, is what I'm hearing you say.
So there's a number of points there that we're hitting, right? The first is to understand that the definition of passive investing in the theoretical framework, what's called the efficient market hypothesis, under which index investing is built, under which the entire methodology is promoted, is built on the idea that when you invest passively, you actually never transact. You never can enter markets. You never can exit markets. In other words, that's magic, and it can't exist. The minute you recognize that you need to participate in order to invest, instead what you recognize is that you are investing in a systematic algorithmic strategy that simply says, did you give me cash? If so, then buy. Did you ask for cash? If so, then sell. The process of money flowing into that type of systematic algorithmic strategy, in which money is continually operating under the framework of did you give me cash, if so, then buy, removes a very important signal that exists at the manager level. Is it a good idea to buy? Is it a good idea to buy this particular company that might be fantastically overvalued? And the more that you bias the system's flows to a mechanical process that simply says, did you give me cash? If so, then buy, and further segments that decision of what to buy into a representation of market capitalization versus other securities, you're reinforcing momentum characteristics that now dominate markets.
That are artificial.
What's that?
They're artificial.
They're artificial. They are artificial prices.
They kill the mean reversion.
They specifically kill the mean reversion, right? Because under a traditional framework, if I introduce a manager in that process, prices going higher without an improvement in fundamentals ultimately means the returns are expected to be lower for that security. Therefore, I'm more willing to sell it. That reinforces mean reversion. If instead I'm allocating the cash simply to a market-based index, that market-based index is going to allocate more of the next dollar to something that has gone up in price. It reinforces momentum. We have seen any number of academic papers that have emerged over the last 5 years that explain this process. I began talking about it in 2016. The academic literature has exploded in the aftermath of that. Everything ranging from the work of Xavier Gabay and Ralph Koyajian at Harvard and Chicago, respectively, what's called the inelastic market hypothesis, to the work of Marco Salmon, also at Harvard, who has identified the clearing mechanisms for how this works, the work of Valentin Haddad at UCLA that emphasizes the disparate impact across market capitalizations of this type of behavior. We have an exploding literature that explains how this works. And unfortunately, they all lead in the same direction. This is exacerbating malinvestment in a capitalist economy.
And yet, I'm the generation, those of us who started working in the 90s and are heading towards our 60s in retirement, that were fed a belief. And it's core to how I have to fight this in myself. But markets, even though we get drops, the trend is always up. But more important, we're told that if you are a passive investor, that you are protected. And you pointed out that an activity that we now know is broadly harmful to our population in its totality is still the optimal choice for individuals. And so there's very little for the individual to do. Now the individual is exposed to dramatically more risk if the flows reverse, and they can reverse for any number of reasons. We've lived it, you and I, 3-4 times in our lives, and we're probably having another.
Well, unfortunately, what you and I have lived through our lives is part of what reinforces this behavior. If more and more money is going to an entity that simply says, hey, you gave me cash, therefore I'm going to buy, that creates buy the dip frameworks as long as people have jobs and are contributing to their 401ks. That creates a scenario in which you and I say, well, it's rational to do this, and therefore it's safe, and therefore more and more people should do this. Well, as more and more people crowd into these strategies, it accelerates the gains. It actually creates the condition under which we feel better and better about our investments, even as they decouple from the underlying fundamentals. And when the net sale occurs, when people ultimately say, hey, you know what, I'm going to take a little off the table. Gosh, I'm approaching my retirement. Maybe I should de-risk. I've got more money than I ever imagined I should have. That creates the conditions of a crash. And unfortunately, everybody wakes up from a bad dream and says, wait, or from a beautiful dream and says, wait, I don't have nearly the resources that I thought. Consumption then falls, and the economy begins to retreat in the same manner that it has been reinforced by these behaviors.
I'm not sure it's the premise of the article I read just the other day in the Wall Street Journal, but I wrote down the individual's name, so forgive me as I look away. Mark Spitznagel, I think it is, talking about we're headed for another 1929 crash. Now, listen, I'm no genius. I know you can't time a market, but there are basically kind of what you just said is that we're setting ourselves up for that kind of crash. Although, again, you and I have lived through those style crashes. Anyone who has been working since the 1990s has lived through 3 of those crashes that were 1929 style crashes. So what's different now?
Well, I'd say that there's a couple of things that are different. Again, the crashes that you and I have lived through, were actually quite mild relative to the experience of the Great Depression. In the Great Depression, prices ultimately fell.
We had a deflationary spiral.
Well, what was actually created is unfortunately something that we're seeing very much of today, right? So the 1920s was all about the creation of leverage. Leverage is a unique feature. It's what I call a financial primitive. There's basically 3 of them. You have you have debt, right, which has a change of control feature. You have currency, which cancels debt. That's why it says on your dollar bill, this currency is legal tender for the settlement of debts, public and private. Think about it like a game of rock, paper, scissors. Rock beats scissors, scissors beats paper, paper beats rock. Currency beats debt. Debt takes precedence over equity. Equity is the residual that is inflated if we create too much currency. Right? So it's that game of rock, paper, scissors. We've short-circuited much of that by repeatedly approaching debt crises and saying, well, we're just going to print a whole bunch of currency to overwhelm the debt components. That has contributed to the perception that equity is increasingly lottery-like conditions and hides the fact that we've also introduced mechanical properties, inflating those valuations, raising the risk of debt, which increasingly is the collateral used against the raising of, cushioning the raising the value of equity, which is increasingly used as the collateral against debt. This is how a 1929 cycle is created. It's by ignoring the importance of the differences between each of these components and trying to solve one problem in a certain way over and over again while not recognizing other mechanisms at play.
This is a very sophomore question from someone who gets worried when I have these discussions. But for people like us who don't have your background in investing, what do you do? Because most of us, because of the 2006 or before, I've been investing my 401k since the 1990s. I remember when I first had the opportunity to do that. What do I do now, though? There's the potential for the indices, if you're a passive investor, to keep going up at least in the next 12 months before a correction. What do you do? How do you position yourself?
So this is where it becomes very challenging, right? Because there's two forms of advice. The first is to take the cynical approach and say, look, this is a truly systemic risk, meaning it can't really be diversified away from. There is no answer to how do you reduce exposure to the market in its totality. We're all exposed to the implications of what we're describing. Right. So one is the cynical interpretation, says, hey, it's all going to be bailed out and therefore I should continue to participate. That's effectively a social vote. There's the antisocial vote, or the I'm going to protect myself framework, which says I'm going to opt out into gold or Bitcoin or things that I perceive as outside of the system and benefiting from the likelihood ultimately that it's going to fail and be bailed out. That's the cynical interpretation. And both are totally legitimate, right? Both are completely legitimate. The challenge is predicting which one is going to occur. And
can I interrupt you real quick?
Yeah.
Because I can't imagine if we had, a correction now, a 20 to 30, even maybe even 40% like 2008 correction in markets. I can't imagine the appetite exists in Washington, D.C. to throw cash at it the way helicopter Ben Bernanke did in 2008. That day is past, has it not?
I think that's actually a really important and critical point that you're raising, right? Because if you think about what really drove the 2008 behavior, we had a Silicon Valley bank in the form of Bear Stearns. We bailed it out. We encountered it again when we got to Lehman Brothers, and we said, no, we're worried about moral hazard. We're not going to bail this out. That created the conditions that led to a dramatic acceleration of the process. I think, unfortunately, we may have something similar this time around. The fears of inflation, the fears of bailout and public outcry against it can create the risks that we don't respond to it. And we don't create the additional currency that is required to, in my model of rock, paper, scissors, cancel out the debt that has increasingly been incurred against equity values that were false, right? So we're creating conditions for that austerity in the form of people saying, well, we can't do that again. And that is always what causes these systems to behave in unpredictable ways.
My father, by the way, was trained as an economist, although he became a lawyer. He got a real job. He used to say, I can remember as a kid, he would say, the people who are buying gold, if you think that the calamity is coming, you don't need gold. You need to stock up on food and get a gun.
Yeah.
What about Bitcoin? And this is an ADHD moment as I ask you, but you brought up Bitcoin. I've never heard you speak about cryptocurrencies. Yes, there is money to be made, but is it a legitimate way to protect yourself, do you think, to try and invest in cryptocurrencies?
I don't think it is, and I'm actually quite public in my outspokenness against Bitcoin in particular. Bitcoin was introduced as a payment system, a peer-to-peer payment system that ostensibly removed the banking rails. By doing that, it was designed in a way that discouraged the use of debt because the banking system is ultimately all about debt, right? I create a bank account so that I can resolve debt obligations in an efficient way. I'll simply send you a check, etc. All of that is ultimately credit-based. People are taking paper that is created by the banking system to settle their debts. They're assuming the banking system is robust. That's what 2008 was all about, was the loss of confidence in the banking system. Suddenly people tried to withdraw their cash. That removed the ability to cancel debt obligations, going back to those financial primitives, and created the conditions of the GFC. Bitcoin was born of that environment. Because Bitcoin creates inherent scarcity, there will only be 21 million Bitcoin. It actually perversely means you can't have a debt-based system, because a debt-based system requires more currency to cancel that debt as you move forward with growth in population and growth in the size of the economy. So Bitcoin imbalances those three financial primitives and creates conditions in which it itself can be a speculative asset, but it can't function in the manner in which it's necessary to really fulfill the needs of a currency. That's why you've seen it move from a payment system to a quote-unquote store of value, but the reality is it's just a speculative asset that is worth what other people are willing to pay for it. The current narrative around it is exciting. It feels like new technology. It's actually a step backwards.
As I get older, I know to pull my hand away from the fire when I get excited by
Yeah.
things. I want to ask you something about tariffs, and then we'll switch to New York City as we start to wrap up. But you had said previously on the United States' role in global trade and where we are right now because we have a tariff regime in place. At the heart of every empire is a consumption center, and the U.S. has basically been the consumption center that has allowed the rest of the world to avoid many of the hard challenges and choices. The ability to use tariffs in a proactive way to effectively force all tariffs towards zero is certainly something that we should not dismiss out of hand. So are we moving towards a zero tariff world, which to me brings back the discussions of our youth, which was global free trade, which when I was a correspondent at Fox and we opened the Washington Bureau, I remember a Wall Street article, Republicans were opposed to global free trade for the first time ever. So where are we right now with tariffs and getting back to that global free trade, perhaps paradigm?
Well, ultimately, as a capitalist, I would love to see an environment in which there is global free trade. But this is one of these situations, unfortunately, where there is a deeper truth, that exists. John Maynard Keynes is famous for saying practical men who fancy themselves exempt are slaves to some defunct economist. Milton Friedman is increasingly that defunct economist today. The arguments behind free trade are built on simplistic models in which it is assumed that many of the components of society frictionlessly reorganize themselves, right? People who are trapped in Cleveland with deindustrialization in Cleveland seamlessly move to the services and technology world of Silicon Valley. We know that world doesn't exist, and tariffs are just one of the mechanisms for resolving the societal costs of reorganizing itself in response to production supply coming from the rest of the world. The U.S. is in a unique place. Our currency is inherently overvalued relative to the productive capacity of U.S. citizens because it has an outside source of demand in its settlement for global trade. That means there's an additional buyer that is competing with the U.S. worker for that currency that raises the price of U.S. labor over and above what would be experienced purely on a productivity basis. It is a consequence of existing at the center of that empire, and it's the reason why the consumption center always sits at the heart of an empire. There will be more buying of things in Rome than there will be production of things in Rome because of these characteristics. In the United States today, we've largely forgotten this, and instead we've decided to ship jobs and income opportunities abroad while paying benefits to an older generation that in many ways is able to benefit from the lower prices even as they receive a return on the employment that they received during their working years in the form of Social Security benefits, Medicare, etc. Tariffs are simply a way of taxing that consumption and saying a portion of it has to be reinvested in the United States, either because you as retirees taking these benefits decide that proactively you're going to buy American, or we're going to force that upon you and incur costs that are then theoretically reinvested into the United States.
Again, the ADHD mind. I think what I just heard you say regarding tariffs is that this is actually an investment in younger Americans who have seen a wealth transfer actually to those of us who are older or approaching retirement or those who are already retired.
That's exactly what it is. And that's unfortunately what we're missing in the dialogue, right? So much of the dialogue at this point is us versus them in terms of Democrats versus Republicans, where we're not having an honest equation or conversation is really about the distinction across generations. Baby boomers feel assaulted, and understandably, by people who are speaking out against them as being the worst generation. They just live their lives like anybody else would, optimizing for the incentives that were created for them. Unfortunately, those incentives have created conditions under which the younger generation has very limited capacity to obtain the dollars that are required to live in the world that has been created and optimized for the boomers. And the tension of resolving those two can either be decided by policy or it can be decided by antisocial activities like protests, burning down houses, assassinating individuals, etc.
So let's go to Mamdani. I'm Gen X. I think you're probably Gen X.
I am Gen X as well.
Okay,
Yes.
so we're Gen X, and we benefit from some of the boomer policies. But I can appreciate for relatives in my family who are some are just turning 30, some are younger, and they live here in New York City, and they're going to vote for Mamdani. As much as I disagree with their choice, I think I understand their choice. I think they're terrified of the expenses of living in New York City and see here's how I'll describe it. When I moved to New York City as a reporter, the union wage, the base was $80,000 a year. That was in 2006. The union base wage today in New York City in 2025 is $80,000 a year. It is the exact same almost 30 years later. So I think I understand why my relatives will vote for him, but I disagree with it. What would you say, the Mamdani effect?
Well, I would say the same underlying phenomenon, right? So on the conservative side, we often object to things like minimum wage or the labor wage that you're describing as a reservation wage that elevates unemployment below that. In a low unemployment environment, it actually means something very different. It means those who are uniquely disadvantaged, who don't have access to the corporate ladder or those entry-level jobs to gain experience, are trapped in a system in which they are paid less of a wage than is required to meaningfully participate in society. That means you have to get multiple jobs. You no longer take advantage of the social experience of living in a city like New York City. You could never afford to go to the theater. You could never really afford to do many of the activities that the wealthy individuals in New York look at and say, this is what makes it the greatest city in the world. How could we possibly disrupt this process, right? Well, it's the equivalent of saying, let them eat cake. And when you say let them eat cake, people respond in revolutionary ways. They lash out and they try to obtain resources for themselves. Mamdani, by talking about equalizing things, is offering a lifeline to those individuals that will almost certainly result in lower aggregate outcomes, but it is a function of an elite class that is unwilling to share the benefits with the lower class until it's imposed upon them.
Okay, so I think we all agree, whether you're a capitalist or Mamdani supporter, that things are frightfully expensive for younger people, and we need to address what are the root causes of that. His solutions, I think I hear you saying, are going to make it even worse. Rent freeze will not create new apartments. It will actually, we saw in St. Paul, it will lead to a lessening of the construction of new housing. But did you just say we need to raise taxes on the wealthy in New York City?
Well, I think, unfortunately, we need to figure out some mechanism by which they are willing to invest more in the younger generation. Now, I personally abhor the idea that we are going to use government policy to do that when we could allow market mechanisms to do that. One of the mechanisms that we can do that by is tight labor markets lead to rising wages. The solution to rising wages is not to say, oh my gosh, the Fed has to fight wage inflation. That's ridiculous. There is no such thing as wage inflation. There are rising wages which actually benefit the individual consumers. Those are costs that have to be borne by the corporate sector, which is largely a proxy for those who are at the higher end of our society. What we're really talking about is our fear that those higher wages are going to be passed through in the form of higher prices rather than in the form of lower margins. That's because we've failed to address issues of consolidation and concentration that position corporations to raise prices and push that through. That's just telling you we've got a monopolization problem in our society in which companies produce not to the marginal revenue and the marginal cost, which is how competitive theory is supposed to work, but simply says, hey, my cost went up, therefore I'm going to pass it through to customers because I can. Right? So we have multiple layers that are intersecting. Wage inflation is basically a boogeyman that is used to scare people that their prices are going to rise. That's a dog whistle to the older generation saying, hey, you've got to stop these young whippersnappers from feeling that they have the opportunity to gain an upper hand in negotiations. It's really perverse when you actually start thinking about it, and it explains why much of the behavior is increasingly devolving into class warfare.
So let's wrap up. I want to ask you one more question about Mamdani. He wins the election, and you and I have a follow-up interview in 2 years. what does New York City look like? Does anything really change? Because I keep hearing from my friends, he might win, but he won't be able to do anything.
I think that we don't know. And that's actually, the always interesting point. I would make many of the same arguments about Trump that I would about Mamdani. We're very concerned about the risks of the executive branch gaining increased authority and control. A very strong mayor in New York City, as Michael Bloomberg showed, can have a meaningful impact on the daily lives of our citizens. There's no question in my mind that on a relative effectiveness basis, Mamdani is far less capable than Bloomberg. And as a result, I expect there to be significantly less deterioration or improvement than you might otherwise have if you had a truly effective individual there. The scary part is you don't know how other rules are going to be changed to make them more effective or less effective. We scream about this on the national level as the potential for rising authoritarianism. We've seen very different regimes in New York City where mayors were very powerful and mayors were very weak. We don't know the structural changes that will occur if we elect an individual like Mamdani. And so I would say, do I think New York will be better under Mamdani? No, I think it'll actually be worse. That in and of itself scares me because it opens up an avenue for an individual like Mamdani to say, the problem is I don't have enough executive authority. Give me more power, then I'll solve the problem. And it's possible those changes get made.
I think it was George Orwell, 4 legs good, 2 legs better.
Yep.
You get the last word. We've talked about Sherwin Williams. We've talked about your Substack and the H-1B visa situation, and people can read that Substack for free. We've talked about Mamdani. We've talked about passive investing, as we always do. Any last thoughts you want to leave us with?
I think the frustrating thing, or the thing that frightens me, is, I am actually I'm an extraordinary supporter of capitalism. I sound increasingly like a socialist. And part of that is because you have to recognize that the unique balance between a representative democracy and capitalism is that capitalism gives you votes based on how much you have. Democracy gives you votes based on who you are. And the balance between those, the populist representation in terms of I have more, therefore I get more votes, versus the individual recognition that I am a human being, my rights are endowed to me, they are non-alienable by virtue of how much money I have, those represent a remarkable balance that has led to the flourishing of the American experience. You can be as cynical in your interpretation of that as you want. You can be as naive in your interpretation as hopeful. I prefer to lend towards the naivete and hopefulness that we can reinstate elements of that. But when we imbalance the system by trying to raise the value of one versus the other, we create conditions that result in immiseration of some segments of our society that we're experiencing firsthand. And, so I would encourage people, it's not that you need to abandon capitalism or that you should abandon democracy in favor of authoritarianism. Instead, we should increasingly be trying to find policies that bring us together in the center. That's part of the reason why I raise awareness around passive investing and the adverse effects to it. It's also part of the reason why I seize the H-1B visa opportunity as a chance to say, hey, wait a second, we've got screaming on both sides and nobody's actually talking about the common factors here. So I would encourage people to become educated on this, and let's try to get something positive done, because once you get one good thing done, it starts solving itself.